Hey, I'm Siobhan Murphy, CPA and founder of Thrive Business Group. I was scheduled to come speak to y'all this week, and then the snow happened. And I'm super bummed that I didn't get to come, but I will be coming in February. In the meantime, I wanted to share with you just a little bit of what we're going to be talking about because I think it's really valuable information, and the sooner you have it, the better. So, Melina asked me to talk a little bit about business entities and tax strategy and how those work together. So if you go on Instagram or TikTok, there's a lot of folks out there preaching S corps as a one size fits all tax strategy. And I get why they do that. It's a great strategy for a lot of small business and a lot of entrepreneurs. However, it's not for everyone. And there are both pros and cons. So I'm looking forward to talking with y'all and sharing a bit more of those details so you have a bigger picture of what an S Corp is, how it works, and when it's a good idea to use it or not. And I want to give you just a little tidbit about why it's so attractive and why everybody's out there pitching this strategy. It's a one size fits all strategy. So when you are in business, if you are an LLC, a single member LLC, your default tax treatment is you're taxed like a sole proprietorship. That means that whatever profit you make, you pay income tax and self-employment tax on it. And for most people, that self-employment tax is actually more than their income tax. So for example, let's just say you make $100,000 in profit in your business. And let's say your kind of average tax rate is 15%. So then you've got 15% income tax, plus the self-employment tax is another 15%. So now you're giving away 30% of your profits in taxes. And that hurts. It's a lot. When you're an S corporation, you become an employee of your company. You get wages. You don't actually get any tax savings on your wages because you're still paying self-employment tax. It just takes the form of Social Security and Medicare. But you also don't pay all your profits out in wages. So that same $100,000 in profit, you might pay yourself 50,000 in wages, and then you have 50,000 in corporate profit. Now that corporate profit is not subject to self-employment tax. So that 50,000, you're now only paying income tax on it. The extra 15% for self-employment tax is gone. So for that 50,000 in profit, corporate profit, that's $7,500 in taxes you're not paying. Now, this is why people get excited about the S Corp, because most people are saving a minimum of 7,000. In our practice, on average, folks who are S Corps are saving around 10,000 in taxes just for their S Corp structure. And then we layer on other strategies. We look for a minimum of another 5,000 in tax savings with other strategies, whether that's depreciation strategies or putting money in retirement or hiring your kids or whatever. There's lots to work with. But this is why S Corps are so attractive. They take a big bite out of the tax burden, and you get to keep a lot more of the earnings that you're making. So, like I said, there are pros and cons to S Corps. I do not think they're a one size fits all tax strategy. And the folks who are out there on social media, and actually a lot of accountants as well who are not social media based, talk about the benefits, but they don't ever talk about the downsides. And there are some downsides to the S Corp strategy. So this is a strategy that can be very powerful if you're a good fit for it. And so this is why I'm excited to talk with you all in February when I come to the meeting. And I'll share with you a little bit more about legal business entities versus taxation and tax entities. They're a little bit different. It's a little bit two different conversations. And then we're going to talk a little bit more. There's a few other basic tax structures for business. So I'm going to give you a brief overview of what those are. And then we're going to talk in a bit more detail about the S Corp structure and what the pros and cons are, and when you know it might be a good fit for you. In our practice, we generally look for folks who are making a minimum of $80,000 to $100,000 in profit. When we see that, we start looking at the S Corp strategy as potentially a good strategy. Every now and then we find somebody at a lower profit level where it makes sense, but it's pretty rare. So if you're looking at your business and in this year, 2024, you are expecting that you might be making at least 80 to 100,000 in profit this year, get yourself in to see a CPA ASAP and look at this S Corp strategy in relation to your specific situation. And if you're interested in talking with us, we are taking new clients right now. Um, Although we are pretty selective in the clients we take because we really take a very involved business advisory role with the clients we work with. Taxes is just one piece of that picture. So if you are interested in chatting with us about potentially getting some help from our firm, the Thrive Business Group, you can visit our website, thrivebusinessgroup.com. Excuse me. And there you can request a free consultation. When you contact us, we'll send you a video with a little bit more information about how we approach working with clients, as well as a new client application. We'll use that information on the application to get an idea of where you're at and what you're looking for. And if it looks like we might be a good fit to work together, then we'll go ahead and schedule a free initial consultation to learn more about your needs and what you might be looking at in the ways of tax strategy and see if we're a good fit to work together. So if you're based on this very, very brief little bit of information about S Corps, it's again just one piece in the whole picture of strategies that we work with for tax savings and helping you keep more of what you earn. But if that sounds like something you might need to be looking at, I encourage you to look at it sooner rather than later. We have a window of opportunity right now to use that strategy for this year. And so it's a really good time to be talking with somebody about it. Now, if you're not sure or if it's not for you, that's fine too. Either way, I look forward to talking with you all in February and digging into a bit more details around the basics of tax strategy for small business. Also, bring any questions that you have. This is a great opportunity to ask me anything, right? See if you can stump me. I like those kinds of questions. And we'll have a fun and juicy conversation about tax strategy in the world of small business. In the meantime, I hope you all stay safe, dry, and warm and enjoy the beautiful snow. I'm looking outside right now. It's starting to come down again. So I'm glad I'm working from home today and looking forward to seeing you all next month.